Okay, next problem we'll see page number 41 and question number 49. Page number 41 and question number 49. See the problem. The finished product of a factory has to pass through three processes A, B and C. The normal wastage of each process is 2% in process A, 5% in process B and 10% in C. The percentage of wastage is computed on the number of units entering each process. It's the same. There is nothing special in this problem. The scrap value of the wastage of processes sold for A, B and C are rupees 10, rupees 40 and rupees 20 per 100 units. The scrap sold rupees 10, rupees 40 and rupees 20 per 100 units. 100 units the value given. You need to find out the for 100 this much, for 1 unit how much. Okay. The output of each process is transferred to the next process and the finished products are transferred from process C into stock. The following further information obtained: materials, direct wages, manufacturing expenses. Established expenses amounted to rupees 8,500, which has to be apportioned in the proportion of direct wages amongst the three processes. 20,000 units have been put into process A at the cost of rupees 60,000. The output of each process has been A 19,600, B 18,400, C 16,700. Output of each process has been, okay, next process, need to calculate the process accounts, abnormal loss account, abnormal gain account and normal loss account. Okay, see the problem. First we need to prepare the table. Normal production equal to input minus normal loss. First we'll calculate only for the process A. Input is introduced how much? Introduced of the input how much? 20,000 units minus normal loss is how much? First one is the 2%, right? 2%. 20,000 into 2%, 400. So 19,600. For process B, same. Okay. Next, cost, total cost. To know the total cost, we need to prepare the process A account. First, materials, how much? 24,000 and the direct wages 16,000, manufacturing expenses 5,000 and the established expenses amounted to rupees 8,500. Total 8,500 means is a total of A, B and C, which is allocated on the basis of the direct wages. What is the ratio of the direct wages? Your 16 is to 10 is to 8 or 8 is to 5 is to 4, right? 8 is to 5 is to 4. 8 plus 5 plus 4 is nothing but 17. So established expenses total 8,500 into 8 by 17. It is a 4,000. Next, one more raw materials, right? Raw material, how much? 60,000. Two types, almost in first there are two types of raw material. One is given in the particular column and one more is the first introduced. How much first introduced? 20,000 units have been put into process A, right? That is 20,000 and the cost of rupees 6,000 means per unit is how much? 3. Next, write the by normal loss. Normal loss is how much? 22% means 400 and the sold for rupees how much? 0.1 means for 100 it is 40, right? For say sold scrap value of production for 100 units it's 10. Then for 1 unit how much? It is 0.1. Okay, 0.1 into 400 it is 40 and remaining we have to transfer for the process B account. Same process B, we have to output of process A is the input for process B. You have to enter that. Okay, then materials given in the problem, direct wages as it is, manufacturing expense as it is, then established expenses total 8,500 into B's part is how much? 5 divided by 7. Then normal loss already calculated how much? 980. You can calculate here, right? Normal loss. Okay, you just okay, there is no abnormal loss under the process A. See, total cost is 1 lakh and 9,000 minus scrap value is 40. So total cost is how much? 1,08,960. And abnormal loss or gain, see, How much is the actual output? Actual output under this problem is given, has been 19,600 minus normal production is how much? 19,600. So equal. There is no abnormal loss. There is only normal loss. That's so nil and nil. Then process B, 19,600 minus 980 as it is. Then you need to find out the cost. Under the cost, write all the things. Normal loss you just write. Then cost means nothing but till the establishment expenses, its total 1,40,460 minus 932 is the scrap value. Okay, then abnormal loss. How abnormal loss? Actual output. How much is the actual output? See the problem. 18,400 minus normal production. Normal production is how much? 16,620. So it is an abnormal loss. Abnormal loss is how much? 220 units. Per unit you have to take the transfer price 7.52. So abnormal loss over. Next the remainings you have to transfer for the process C account. Next process C, same. Process A, materials, wages, manufacturing expenses, establishment expense you have to write. Then normal loss you have to write. Then you see the normal abnormal gain or loss. Just enter all the things under the particular table. 18,400 minus normal loss 1,840. How much? 16,560. And then the cost, you have to calculate the cost. Total is 16,541.6 minus 638. Then you have to convert the abnormal loss or gain. 60,700 minus 16,560. 140 units plus means abnormal gain. Then cost divided by normal production units 16,560. So how much is the abnormal gain? 140 units into this one 9.97 equal to that method. The remaining you have to transfer the finished goods. Okay, next we need to find out this is the same as previous problem. Now one more extra thing we have to calculate under the normal loss account, abnormal gain account and abnormal loss account. First we have to prepare the normal loss account. How to prepare the normal loss account? See, normal loss under the process A. How much normal loss? See, 400 units, rupees 40 per unit 0.1. Same to process A, 440 0.1. To process B, how much? 980, 392 and this 0.40. Process C, 1840, 368 and 0.2. Okay, normal loss. And now you have to set of the normal loss with the help of the abnormal gain. Gain means it's income, right? Normal loss means it's a loss. So we can set up. Okay, see, abnormal gain is there under the process C, right? So see how much? 140 units. So by abnormal gain account 140 units, and per unit you have to take the 0.2. 0.2 is nothing but under the abnormal loss. How much is the process C? Units 0.2. So 0.2 have to take. So 28. Okay, set off. Next, by bank account, the remaining normal loss you have to sold. We have to assume you are selling. See, under the process first one, process account is 400 only. Under the B is 980 only. But under the process C, 1084 normal loss. Under that, set up for the 140 units, the remaining is 1700. So per unit 0.1, 0.4 and 0.2. So this is the answer. Okay, next we'll find out the abnormal loss account. It's very easy. Abnormal loss under the which? Abnormal loss under the process B, right? To process B account, you just enter the abnormal loss. You have to transfer that to the by costing profit and loss account. Okay, then abnormal gain account. Abnormal gain account. Okay, in which year? In process C, right? Process C. By process C account, you have to enter abnormal gain figures. Then normal loss account, because there is setup, right? So you have to show the setup. So to normal loss account, here entered not abnormal 140, 28, 0.2. Here also 140, 28, 0.2. Then remaining is transferred to the costing, profit and loss account. Remaining should transfer to the profit and loss account. Okay, this is about the problem. Don't get confused, and there is nothing extra in this problem. Only the thing is you have to prepare the 3 accounts and the normal loss account, abnormal loss and abnormal gain account. The new thing is under this is only the one is established expense you have to divide for the 3 departments, and one more thing is calculation of normal loss. Normal loss is nothing but you just write all the normal loss under the here. Then abnormal, if there is an abnormal, you have to set up units as it is 140 units. Then per unit you have to take in which year normal loss again is there. In that year, price of the per unit of the normal loss is how much? 0.2. Okay. Then the remaining you have to sell in that respective per unit price. Okay. So 400 into 0.1, 980 into 0.4. Here 1800. Why? Total 1840. 140 is set up. So remaining is 1700. Okay. This is about the one more problem under the cost accounting.